Ladies and gentlemen, I will show the presentation in my computer. I will try to speak in simple and easy terms so that everything is clear to you. I'm happy that the previous speaker, Mr. Jānis Vīklis, already told many things about the essence. When you have the product, when you have sales, and when you have customer support, you as entrepreneur can often decide that you want to grow and expand. For instance, you sell your product in Latvian market, but you want to enter Baltic market, or you operate in Baltic market, but you also want to enter Nordic market. In such a case, you definitely need new resources. It is often that risk capital is the most suitable form of financing. I will tell you more about risk capital. I work in a risk capital fund, ZGI Capital, for 4 years, and I'm also a member of the board of Latvian Risk Capital Association. Basically, risk capital is long-term investment in the equity capital of a company. Our aim is to promote faster growth and development of a company. We are actually growing together with the company because the value of the company shares are directly dependent on the success and profitability of the company. I would say that risk capital in a way is similar to marriage, but we know not only that we will get married, but that we will also get divorced within 5 to 7 years. The basic task is to increase the value of the company as much as possible throughout those 5 to 7 years. Risk capital in Latvia and also globally is divided into 3 stages. First stage is early stage risk capital or acceleration capital. It involves such forms of risk capital as business incubators, grant programs, for instance, idea competitions, Step Point, also Latvian Business Angel Network presented by Ms. Aiga Kolobjanuka, and others. The good news is that from the next year on, 3 new acceleration funds will be available in Latvia, and they will provide new investment opportunities. Next stage is seed capital. It comes into play when the prototype has been developed, the business model has been tested, and the project is promoted in the market. Third stage is development capital. We are currently developing the 4th Development Capital Fund. Development capital can be used when the product has established itself in a market, but the company wants to expand, and financing is used to increase and strengthen the volume. In the next years, there will be not only 3 new acceleration funds, but also 2 new seed capital funds and several new development capital funds, including ZGI Capital. The benefits of risk capital involve co-funding for a company. It helps to increase the efficiency, capability and capacity of the company, as well as strengthen its marketing activities. Risk capital also helps to receive loan from a bank. If you want to have a bank loan for the development of your company, the bank usually will request you to provide your own funds. You might have, let's say, 10% out of the 20% of own funds requested by bank, but the rest of the 10% you can request through risk capital funds. Risk capital financing is also considered to be own funds. What are the steps to achieve investment decision? First of all, investment plan has to be developed. Nowadays, usually it involves 2, 3, 4 pages of a description of a business idea, or it could be a brief presentation with information about your team, marketing, sales, and necessary funds. You take your business plan or presentation with you, you come to a meeting with us. We review your business plan or presentation and take decision. We work with finances, and if your project is highly technically specific, then we can attract a technical specialist who will ask you the correct questions. Usually it takes 2 months from the first negotiations to the very investments. Investments are made in the company for a period of around 5 years. Throughout those 5 years, we will do everything possible to help your company grow. We will share our contacts, our experience, knowledge, and strengthen your marketing activities and other operations. After 5 to 7 years, the company and its shareholders need to be ready to sell the company. This idea has to be in the mind of the company owner and shareholders from the first day on. In the next slide, I will show you the criteria for product revision and assessment. Risk capital investors are interested in your team, in competitiveness advantages, and growth potential. As to the team, investors are interested in the experience of your team, the reliability, and managerial potential. Often we see that 2 salespersons or 2 scientists come to us with their project, but it is necessary that a company and its managerial team has sales capacity, technological capacity, and managerial capacity. It is clear that one person cannot have all of those remits and competencies. And the broader the competencies, the better. As to the competitive advantages, you need to know answers to question why is your product better than its equivalent in Germany, UK, US, or somewhere else. We are competing against the whole world. So you need to understand what is the competitive advantage. Is it technological benefit? Is it economy of scale? Is it marketing benefit or something else? You also need to understand what is the business development potential, what is your respective market, what is dynamics in the market, does market show growing and increasing trend. Latvia has a small economy, therefore you have to have the idea of export in your mind from the first day on, and you need to understand what is the export capacity of your product. Here I have written down a couple of questions. I could also call them typical mistakes we see on a daily basis. In order to illustrate our experience during the last years, the first risk capital fund was founded in 2005, then later the next fund was founded, and at the end of 2013 we developed the third ZGI Capital fund, but at the end of 2016 we made the first investments. Throughout those years we evaluated 900 project applications, but we have invested in 34 projects, so you can calculate yourself what the proportion is. So, as I said, I have jotted down a couple of questions and typical wrong answers to them. The entrepreneur, when coming to negotiations with us, needs to know how large the target market is and what is the market share the company expects and is able to obtain in the upcoming years. The mistake is that companies sometimes develop a small product for a specific narrow niche. The company has ambition to get 25% of the respective market, but it's very difficult to get 25% market share in any market. The next question, what are the critical investment positions? How will they help to increase the income and profit? It is necessary to define the critical investment positions. Often, many aspects and issues in a business plan are not justified and they don't have any impact on profit and income. The next question, how will the business model economy will function? For us it is important that the business model functions and looks good not only on paper and in theory, but that it has also been tested, for instance, in real life or online in YouTube, LinkedIn or other social media. It helps to understand how much the sales will cost, or in other terms, how many euros you need to spend in order to have 1 euro as a profit. The next question is, have you developed and tested prototype? What are the results of the tests? Entrepreneurs often go to risk capital investors and funds because they want financing for development of prototypes, but for that different instruments are available, for instance, acceleration funds. The next question is, have you talked to your client, to your customer? Do they know about your product or service? If they are familiar with your product and service, a good idea is to conclude some preliminary agreements or memorandums with your customers on buying your products or services. The next pitfall is the failure to define specific amount of investments. It is necessary that you calculate the actual amount of investments necessary and how you will spend it. You need to understand where your company is heading within 2 years, 5 years, and also in 7 to 10 years. What is the short-term, medium-term, and long-term vision of your company? And then the next question, which derives out of this one, will you be able to sell this company? Will it be attractive for a buyer? And do you want to sell the company at all? If you want to keep the company for yourself and probably give it as a legacy to the next generation, then risk capital is most probably not the right instrument for you. You need to answer this question for yourself. Now I will talk about structure of businesses and activities. Risk capital fund is investing a particular amount of money, let's say 200,000 euros, and becomes a shareholder. We have a strategy of becoming a minority shareholder so that you as company owner have the maximum motivation to develop the company. We usually are shareholders with 10, 20, or sometimes even 25% of capital shares. Here I have a slide on risk capital benefits compared to bank loans and EU grants. The benefits of a risk capital is that we share both risks and successes with the entrepreneur. As I said, from the first negotiations to the actual investment, it takes around 2 months. It is quite fast. No additional or co-funding is necessary, and risk capital allows to recycle public money. Money is transferred to risk capital funds and it is invested in Latvian companies. Latvian companies develop, create new jobs, create market growth, and this money is then spent and also later on transferred back to the risk capital funds and also to Altum and Latvian state indirectly. So money makes money and the cycle of economy keeps turning. Risk capital is a new means of payment. It is a smart means of financing. You can compare risk capital to motor racing. We are not sitting in the back seat, but we are sitting in the front, just next to the driver. You are the driver, you know where to go, but we can give you advice where to take a shortcut or which road has the most beautiful landscape. We can give you the tips, tricks and support necessary. I will tell you a couple of investment projects interesting. One of the companies was Rietavas Service. This is a company that produces a quickly foldable and installable equipment for exhibition halls. The company approached us in January 2014 with an idea to provide quickly installable exhibition stands. They are of high quality, and the company was also able to provide full service for exhibition halls. We liked the idea, and me and my colleagues met the organizers of exhibitions. We understood that they are willing to buy the services and products of Art Service, but they need a lot of exhibition stands. For the total amount of 200,000 euros, we saw a good business opportunity there. We invested in the company. The company achieved a turnover of 1 million within 3 years. 90% of the turnover was made up by export. Currently, the company provides services to customers in Belgium, Netherlands, Germany, Denmark, Spain, UK, and also for one customer in Latvia. In 2017, the owner of the company bought out our shares in the procedure of management buyout. We had 28% of shares in the company. The company attracted a cheaper loan from a bank and bought out our shares. Then there's another company, Mobility, it's a technology company. They approached us last year. We invested in the company. It was an existing company with a stable customer base and with a stable business model. But Mobility decided that they want to grow and provide new services and also to extend their activities in geographical scale. In order to extend your operations as a IT company or technology company, you definitely need additional financing. We have invested 700,000 euros in the company. We own 10% of the shares. After 1 year, we see that the company has experienced swift growth, but it still has huge potential for further growth.